Assalamualaikum. Welcome to video 18. This is IAS 33 earnings per share. Now, this is tested in both financial reporting and SBR, but the way it is tested is different. In FR, it is calculation of EPS, and in SBR, it is the focus is not on the calculation, but rather what is the impact of the of error in EPS on your financial performance. Now, IAS 33 applies to all listed companies. Private companies therefore has to follow the standard if they disclose the EPS figure. There are two types of EPS that you should know. One is basic EPS, other one is diluted EPS. Basic EPS is profit or loss for the period, that is for the equity shareholders, divided by the weighted average number of equity shares. The weighted average number of equity shares takes into account when the shares are issued in the year. Diluted is IAS 33 requires diluted EPS to be disclosed as well as basic EPS. So diluted EPS will show the effect on your current EPS if there are potential equity shares that has been issued under the greatest possible dilution. That means, what is the meaning of word diluted? Your EPS will reduce because either you are selling your shares, either you are buying more shares, there has been a change in the number of shares as well as the profit. So EPS reduces. Your basic EPS will always be more than your diluted EPS. Okay. Now, what are the potential equity shares? It consists of these things. Because of these things, there are differences. That means your EPS will be diluted. Convertible loan stock, share options, rights granted under employee share schemes, rights to equity shares that are contingent upon future event. So all these four options. Under these four options, you have to calculate diluted EPS. Okay, and the detail of this is explained in my lecture IAS 33. Now, example. So an entity has issued 200,000 shares at a full market price on 1st Jan 2005. Date is very important. Number of ordinary shares in issue at 30th June 2005, that is after 6 months, is 1 million. Okay, so if you calculate the difference, how much they have issued, 1 million minus 200,000, 800,000, and the profit is 550,000 for 30th June. Now, to calculate the basic EPS, okay, your weighted average number of shares is this. From Jan to June, that means for the first 6 months, you have 200,000 shares already. Sorry, 800,000, because you have issued 800,000. So 800,000 for the 6 months. Thereafter, you will be having 1 million. Then from 30th June till December, so 1 million for 6 months. So you add both, it's 900,000. The number of shares. Profit remains the same, 550,000. So 550 divided by the weighted average number of share, which is 900,000. Now your EPS is 0.61. But if there are anything, for example, share options or anything, you have to calculate the diluted EPS as well, which will be less than 0.61. Not very different, but somewhat lesser than this. So thank you for watching, and make sure that you do enough questions on EPS. EPS is usually not asked, not a very frequently tested standard, but whenever it is asked, make sure that you know the calculations, the formulas, because it is highly scoring standard. It's very easy to score marks for EPS if ever you are given. But in SBR, it's more like analysis. You have to do the analysis. What could be the impact of EPS on your performance, position, cash flow? Okay. Now, the next standard is another very important standard, that is IAS 36, impairment of your assets. So, see you in the next standard.